All right, ladies and gentlemen, my name's Rodrigo. Welcome here today, Inner Circle members and everybody else as well. We have a great session here planned for you today with Matt Maley, Chief Market Strategist at Miller Tabak, and the lead trader at the Stock Picks Inner Circle chat room, where he's trading options all day with all the members, of course, Monday to Friday, 9 to 5. So, welcome everybody. A couple shout outs here. I see some friendly faces. Louis, Mezeka, Rad, what's going on? Suzanne in the house, Valerie. Hello, everybody. And just want to let you guys know the reason why Matt wasn't here, it's because he was in the live trading room with all the members. It was a great day there. They did a lot of great trades. Matt's going to tell you all about his strategy. And that's what we're going to talk about, how to apply that in these markets and some other stuff. So let's go ahead and bring on the man himself. 40 years in Wall Street experience, Chief Market Strategist. Let's go, Matt Maley. Let's bring him in. What's going on, Matt?
Okay, there we go. Got extra stuff going on there. That's great. Not just not just one or two, but you give me like three or four there. I like that. Oops, start my. Is it? Can you see me? Okay.
Yeah, all good.
Okay, good. Anyway, let me just get sharing my screen here, and we'll hold on one second, and we'll just get right into it.
Yeah.
The bang. Okay, that's fine. Okay, share, bang. Let's go to here. Whoops. Sorry about this. It's just been a crazy day today, a great day today. I mean, well, it ended up being a great day today, but worked out very well for us in the chat room after a wild week. But let's just get right into it. I mean, first of all, we have some people in here who may be relatively new. I'd very, very briefly tell you who I am and what we're doing here in the chat room, in the Stock Picks chat room, that Inner Circle, whatever you want to call it. I'm going to turn this thing off. I had the golf tournament on after the market closed. Hold on a second. So anyway, what we're talking about, or what we're doing right now. Well, first let me tell you who I am. I'm, again, Matt Maley. I've been in the business almost 40 years. Before 40 years in November. I started at Solomon Brothers. And if some of you younger people have not heard of Solomon Brothers, it was the premier trading firm on Wall Street, along with Goldman Sachs. But we were really the biggest trading firm. Goldman Sachs was the bigger overall firm because they had better banking, better research. But we were the big traders. And through the 70s, 80s, and 90s. Now, I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s until we basically got bought out. That's when I went to Merrill Lynch, which is the biggest trading desk on Wall Street. And at that time, I covered the trading desks of some of the biggest institutions of the business. There would be the biggest mutual funds, the biggest Fidelity, BlackRock, the biggest hedge fund, insurance companies, banks, etc. And you really learn what's going on in the marketplace and what's really happening, not just what you think should happen. And when I became a strategist at Miller Tabak, which I'm still doing there, and you may see me on TV. I was on yesterday morning on Bloomberg TV. Actually, I think that was Bloomberg in London, but and I'm on CNBC in Asia sometimes, and all sorts of different things. But I'm on quite frequently during the day on CNBC and Bloomberg TV as well. Also, TD Ameritrade. Well, it's now it's not TD Ameritrade anymore. It's Schwab and Yahoo Finance as well. But anyway, again, covering these trading desks, I really learned how, what to trade and how to combine everything. The many strategists really focus on what should happen. That's why they've gotten killed this year. That's why they stayed way too bullish, way too long. And as the Inner Circle people who've been on the thing for a while now know that I turned quite cautious on the stock market at the end of last year, not as the market went down. I was telling people, you got to get out, you've got to raise cash, big cash. My big bucket, we all have, big buckets that, long-term trading and long-term investments that very high, very, very high in cash. And that one, as we moved into the year, because I knew what was about to happen. I thought it was as plain as the nose in your face. But of course, most of the people on Wall Street are paid to be bullish. So even if they saw it, they didn't talk about it. Anyway, and then in my trading account, we're up several hundred percent, many hundreds of percent. So the overall portfolio is up very, very nicely this year. And again, we focus on what should be happening. I'm sorry, what not just what should be happening, what is happening and what will happen. We look at the fundamentals. That tells us what should happen. But we also look at technical analysis. We look at sentiment. We look at positioning. And we look at history. Maybe that was probably the biggest thing for me to make the calls that I've made this year. And then we pull this all together to really make some great trading in a market that's obviously having a horrible year. I mean, today they use the term, we fell into bull market territory at one point today, and then we were able to close slightly above it. And in fact, I got called right at about 3 o'clock asking me if the market bounces back, and I said it's going to bounce back, and they went, "What?" Well, geez, we thought it, and I said, well, if it does bounce back, what do you what would you say, and whatever. So I'm guessing I was quoted here. Let's see here, MATT. There we go. Sure enough, there we are, and I was quoted right after the close here. Bull market near-term death experience. Okay, so there I am. Oops, there you are in the Bloomberg, and there I am. All bottoms start with short-term trading, blah, 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 blah. Anyway, so I was quoted there. Anyway, so what we're trying to do is profit from this, and we have the tools to do this. And I have the experience to kind of help people make those trades. And like I said, we're up, well, at least I'm, up several 100% this year, and we really get in there and make some great short-term trades. Some of those over a couple of days, kind of swing trades. Some like we made today, were just in a couple of hours, and some just in a half an hour. But it's for so many years, decades, forever really, the only people who could really take advantage of downside movement and big volatile times in the marketplace were the institutions, because they're the only ones that could trade anything but the quarterly options. For individuals, you could buy and sell those quarterly options on indexes or on stocks, but that's the only thing you had. If you wanted to make a negative bet, you could buy a put option, and many times, if you wanted to buy a put option today on Apple Computer, or you would have to go out at least 5 weeks, about 5 weeks now, to the June expiration. That's a lot of time involved. So the person that's selling you that insurance, selling you that negative bet, has got to hedge themselves. And so they've got to charge a lot of money because it's 6 weeks out. But now we have weekly options in Apple Computer. So now it's just a few days out. They don't have to charge you that extra premium because the time premium isn't anywhere near as much. There's not as much risk for selling somebody an option, to one of us an option, that expires in 3 or 4 days than there is than if you can expire for a month or 6 weeks down the road, 6 to 10, 12, 16 weeks. I'm sorry, 10 or 12 weeks. Now we have them. We have all this Apple, Microsoft, all the big cap names. They have weekly options, and of course, we also have most of the mid cap stocks have options that are there every single week. And also in the index options, we have ones that expire 3 times a week: Monday, Wednesday, Friday. And we know in 2 weeks we'll have a holiday. Memorial Day is a week from Monday. That week, they will adjust. They'll still have 3 expirations. It'll be Tuesday, Wednesday, and Friday, instead of Monday, Wednesday, Friday, because when the market will be closed on Monday.
Right. Really quick here, Matt. Someone's asking here, you're posting entries and exits in the live trading room, right?
Exactly. And so we have these things, and not just to mention those options, we also have the ETFs and the inverse ETFs and the leveraged ETFs that we can make all those things. And we go into the chat room, and every time I do a trade, I post it in the chat room, the exact trade. Some people go out and say, hey, the market looks pretty, pretty bearish here. You ought to make you ought to make a bearish bet. Hey, the tech sector looks good. Take a look at Apple. Well, I come in and say, hey, like this we did today, the market is selling off. Late in the day yesterday, we bought some bullish bets on the NDX, on the QQQ. It was what we call the SQQQ calls. It's actually a bearish bet. We sold those this morning we bought them in the last hour of trading yesterday. We sold them this morning at about an 80% gain, and I'll show you that in a minute. And then then we switched that trade. We switched that trade late in the day and made a bullish trade in the QQQ calls. Again, that's the NASDAQ, the ETF for the NASDAQ 100 index, which has all those tech stocks in it. And we made over 100% in
Right.
just literally just a very short time.
And that trade, just so you know, Matt, like I took that trade from the chat room from the SQQQ. You bought, I think you bought the $57 call and the 55.
55, yeah.
Yeah, so I got the 56. I held it. Well, I opened it in the morning. I closed it at the end of the day. 180% gain on those calls for me. And Matt, I appreciate all the work you do, man. This is, I mean, as a trader myself, the fact that you can it's like a great temper check for when something's happening in the market. I go to the chat room. That's Matt, to your chat room, right? That's where I pretty much see. Okay, if you're bearish, then I need to make sure I'm on that side of the trade always.
Well, that's how that worked really well today. I'll just show you these trades here that we did, and don't worry, I'll blow it up here so you can see it better. Whoops. Okay, actually, I want to go back one. Whoops. Okay, so here we are. Just to get the specific idea. I mean, we're going in here, and you can see where this is what the May. And again, when I go into the chat room, we have 2 pages. We have one that just scrolls all day long, but we have a separate page where I put in. It's called Matt's Important Comments, and mostly those are when I put my trades. Sometimes I'll make a few other comments, but in other words, I may put. Today, I probably had 10 posts, maybe not even 10 posts in there. You don't have to scroll through all the stuff. You'll just be able to hit that page and say, okay, this is what Matt's doing today. And so I can see and we tell you the exact trade. We tell you whoops, what did I do here? Okay, hold on a second. I just hit something wrong, but I'll come back to it. Whoops. Okay.
No, you didn't know. I'm showing them the chat room.
I see. Okay, I'm sorry. Okay, I thought I screwed up. But anyway, we went in and we show you the exact trade. Where was that trade? What was the trade we were trying to do? What happened to my? Let's see, escape. I can't tell what I'm looking at here.
The chat room right now. They're seeing the chat room there, I believe.
Okay, they're seeing the chat room. Okay, what happened to my thing? I'll have to pull it back up.
Yes.
Okay, there we are. Okay, perfect. Sorry about that. So we came in yesterday. Here you can see down here at the bottom it says May 19th. That was yesterday. Today is the 20th.
You're not sharing the screen yet, I think.
Okay, sorry about that. Let me
I think it's
okay. Share screen. Okay. Sorry about that.
All right. Yeah.
Okay, here we go. And then we got into the so anyway, we got so like I said, we say the specific trade. This was the SQQQ. That is the inverse, the 3-time levered ETF on the QQQ. In other words, this is a negative bet on the QQQ. So we expect it to go up if the market goes down. And late yesterday, we came in at the very end of the day and bought these calls. Okay. Now, there are other people like Rodrigo, and I'll talk about that in a second. But these were the ones. So I'm giving you the ones that made the least amount of money. There was others that people made a lot more money. But anyway, SQQ, May 27 calls. So I give you the expiration date, the asset, the strike price, and obviously whether it's a call or put. In this case, it was a call option. It was a call option, even though it was a negative bet. And we made basically double our money by midday yesterday, by midday today. Okay, there were others, okay, who came in and bought it down here, who waited till this morning and bought it down here, and they made over 100%. And in some cases, they got even more gutsy and bought an SQQQ option that expired today. Okay, so only had 1-day option, and they made several 100%. But again, as the market went down, we made money. The key is we want to be able to make money in both directions, and that's what we did. Later in the day, we came in. And the market was down, it was like it's flat on its back. And I said, we're going to get a late day rally for a number of different reasons. And mostly because I thought the authorities would want to provide some liquidity in the marketplace to really help the market rally at the end of the day so that people didn't panic over the weekend. So we came in, we bought the QQQ May 23, again, right in the chat room, and not just in the chat room, but in the Matt's picks picks page. And like I said, I also put some other comments in there every once in a while, just to set up a trade or just to give or something I think is really important that everybody sees. But put those trades in there. Okay. Hi, honey, I'm doing a webinar. Okay. It's my wife. So anyway, so what we're doing here is So again, I'm sorry, I lost my train of thought. But again, the QQQ May 23 calls, they expire on Monday. I didn't want to go out very far because I was looking for a late day rally. And the one thing I could have bought them, you get a little dicey here. Number one, there's some people in our chat room whose people, or I'm sorry, their platforms will not let them hold options until the close. They force them, they take them out of the trade. So with that in mind, I thought, I don't want to buy one today, which would have made even more money, but I went through for one that that expired on Monday. So we bought the QQQQ, May 23, that's Monday, 287 call options. The market was flat in its back, and the market was down 80, the S&P was down 80 points, and I said the market could finish, the S&P could finish in plus territory today. Few people agreed with me. Most people thought I was crazy, but I went ahead and bought some of these calls in here. And then as the market started rallying, I added to them there and got a pretty nice position here. And when it broke out, so people were adding in here when they saw that the market was starting to rally. I bought very small here. It was here at the same price. It's basically the same price. I added to it in a big way. And then when it broke above here and got a higher high, its first higher high of the day, we added some more, and it rallied 174% in the last half hour of the day. I mean, you can see it was a little more than a half hour, but you can see what we're doing. We're acting on things, and we're taking advantage of this ridiculous volatility in the marketplace, and we're going to continue to do that. We've been doing it all year. Just a couple of days, last week, talk about last week was one of the best weeks ever. Bang, bang. Last week we came in on Thursday. Remember, the stock market was getting absolutely crushed last Thursday. And towards the end of the day, the market flattened out. And some number of things that I was looking at that in terms of my indicators that have worked for me for 40 years. And I see part of it was literally just the market's flattening out. I saw some signs of capitulation. And to be honest with you, one of the big indicators was Bitcoin. was that Bitcoin had stopped going down. I realized that the forced selling that was being caused in the marketplace by the margin calls because of the crash in Bitcoin, or in the cryptocurrencies, because remember those stable coins were no longer trading one for the dollar. People got margin calls in that marketplace. They had to sell whatever they could. They had started selling stocks. They started selling their cryptocurrencies, but they were selling whatever they could. And sure enough, we came in. I said, the market is bottoming here. Let's buy the TQQ calls. So I wanted to get into the leverage calls. Remember, these are the positive leveraged, 3 times leveraged ETF on the QQQ. These were for last Friday. We bought them on Thursday, the 12th. We bought them for the next day, the $29 calls. Look how much they rallied between 3 o'clock. And when we sold them the next morning at about 11 o'clock, we made 600%, 600% on the trade. Now, if you'd hold a little bit longer, you would have made a little bit more. We didn't get the exact bottom. We didn't get the exact top. If anybody tells you that they get that all the time, I mean, if you do, it's lucky. Who cares? I mean, if you got it here, who cares? You made 500%. These you can't. I don't worry about that stuff. Once we get a big gain, we take the profits and move on. And that's what we did. At basically the same time, or actually about half an hour later, this is just a week ago, I said the same thing. One of the reasons why the market was doing so badly, why the stock market was doing so badly, as I said, we had forced selling, we had margin calls in the cryptocurrency market, but especially some of these smaller Bitcoin, stable coins and cryptocurrencies just aren't liquid enough to meet margin calls. So people are saying, hey, you owe us $10,000. And it's like, there's no bids out there. There's no buyers. I can't sell anything. So I've got to sell something else. Well, what did these guys hold? What did these guys own? Well, they didn't own General Motors, okay? These are high-tech young people looking at high-tech things. They were selling Apple Computer, and Apple Computer was basically getting hit because that's where these people could make the money. My experience told me that. I remember from Long-Term Capital that 25 years ago that was a famous hedge fund that was incredibly successful, but blew themselves up. They got major margin calls in esoteric bonds that nobody could, and they just couldn't sell. Nobody was willing to buy them. So they went and they sold General Electric, which back then was the biggest, most liquid name. I could see what was going on in Apple Computer. It was falling out of bed. There was no news out. I said, this stock is bouncing, is stabilizing with the rest of the market. We came in, we bought the options. Again, shortly after I bought those TQQQ options, we came in, we bought the, again, specific trade, Apple, May 13th, $143 calls. And then here at 11 o'clock, I came in and said, we're going to take profits on these. They're up over 400%. We're taking profits. Now, again, I don't pretend I didn't get the exact bottom. And if it held on longer, and some people did, you made more money. I didn't. I have to be honest. I can't. I could just say, oh yeah, geez, some people would want to say, oh, I bought it here right at the bottom, sold them right at the top. I did not. This is, you got the real numbers. But that's what we're able to do. And I'm going to say that again, the tools are there that we're able to do it. And the biggest thing is to, I say blow my own horn, but we've had a lot of trades like this year. I mean, we had one trade. We go back, and wasn't that long ago. Whoops, I'm going the wrong way here. Let's see.
So I haven't mentioned this, guys, but basically Matt Maley has the record in Benzinga for the highest percentage trade. I think some people made like some 14,000% on FXI, and then some. And before that, he had the record with the Viacom, the famous meme short trade he did.
Exactly. And that's what we do. I mean, one of the things is that we're looking at all sorts of different markets. We're looking at the stock market. We're looking at individual stocks, as you saw what we did with Apple. We're looking at index ETFs, which are incredibly liquid. You can trade them like May wheat. It's so fabulous. And although May wheat in Ukraine right now, not so good, right? But that's why the commodities are so high. But I'm not making a joke about Ukraine. It's a horrible situation. But we look at all sorts of different markets. We can make money in the currency markets. We can make money in the bond markets because we have ETFs. Now we're starting to look. It's going to be interesting next week. We might be looking at the HYG high yield ETF on the buy side. Believe it or not, it's become extremely oversold. I'll talk about that further later. Again, it's going to be a very risky move, so I'm not going to bet a lot of money on it. But when things get incredibly oversold, and that's what happened in the Chinese stock market. 20 years ago, you couldn't buy something in the Chinese stock market. You had to have some broker in Hong Kong or Shanghai that would do a currency conversion for you, and you couldn't do it. I mean, your local Merrill Lynch broker wasn't going to do it. But here we have, because of the ETF market, because we have options in these ETFs, we could go in. See how this stock, we were using the RSI chart. We looked, again, looked at the fundamentals. The fundamental situation was negative. You can't just look at the fundamentals. If that's all you do, you're going to get burned, because that's not trading, okay? You want to be a long-term investor, fundamentals are vitally important. But when people get, it so often happens in the marketplace, too many people get way too bearish or too many people get way too bullish, and that provides great trading opportunities. And here we use what this is called the relative strength index, RSI, relative strength index. And it shows you when it gets down here to the green line, which is at 30, it's oversold. It's a green line because that's telling you, go ahead and buy. And when it gets up to the red line or higher, that means stop. That's why they have a red line, stop. It gets up to 70, sell. Well, this thing look how oversold it got. It got down to 14. 30 is considered oversold. It got down to 14. The second most oversold thing I'd ever seen, and it was for this particular ETF, it was the most oversold ever. So I combined that with my experience of knowing that whenever the market is flat on its back like this, it doesn't happen that often, but when it does, the Chinese government comes in and supports their market. I knew this thing was going to bounce back. And I knew it. Sure enough, that night, so we went in and we bought these, came in and we bought, So we went in and we bought the FXI March 18th, $30 calls. We'll go back here again. Remember here's the stock. It's completely, the ETF is incredibly oversold. Look at it a couple of days later. Look how much it rallied, 27%. That's not the option. The option didn't rally 27%. The whole market did. Can you imagine if the S&P rallied 27% in 2 days? That's what happened here. But I saw it coming, and we were able to buy those again. The FXI, which is the Chinese big cap ETF, the March 18th. So that's the expiration date. The $30 call option. The next day, we bought this at 3 o'clock in the afternoon, late in the day. The next day at 11 o'clock, it was up 3,000%, or 2,948% to be exact. And I said, okay, we got to take some profits. I didn't say all of them though, because when you get what happened today, when I took profits right on the close, I'm like, I have no idea what's going to happen over the weekend. Anything could happen. So the market could fall back apart. But in this one, I knew it could keep going higher because I knew the government was going to support the stock. It wasn't just that it was oversold. I knew the government was going to support their market. Sure enough, we sold the other half about up 8,000%. This is just a month and a half ago. I mean, so we get these hundreds. I showed you on Apple, we got 400%. The TQQQ, we get 600%. These kind of thousands of percent don't happen very often. Last year it happened with a trade in Viacom. This year and this one, but these are where you really make the big difference. You can knock the ball out of the park. And there were people who held on. Okay, there were people in the chat room who they don't. You don't have to buy exactly when I say and sell exactly when I say. There are people who said they made over 14,000%. And if you went up through the next couple of days, you'd see that was indeed very possible, and that is what they did. Again, we have the opportunity to do it, and we've been doing it on a pretty consistent basis this year. I mean, I just want to show you the other one. Whoopsie. That we have here, the Viacom that we mentioned earlier. This was last year's trade. You can see in 2021. But again, I was using the technical analysis. It was a meme stock. I'm like going, wait a minute. If this thing gets overbought above 70, it goes down every time. This time, it got to 95. It's the most overbought. It's equal to the most overbought I've ever seen anything. So we bought the put options in the Viacom. And I was like, it was just one of those meme plays. Remember back in March of that year, this was one of the meme plays. It was a big short cover. It's like, great. You can say some technology stock is going to change the world. Viacom is not going to change the world. Great company. It's now Paramount, now known as Paramount. Great company, but they're making TV shows and movies and things like that, and streaming things. They're not going to save the world. They're not going to cure cancer. They're not going to come up with the next iPhone. And so again, we made 5,000%. I made 2,500 the first thing in the morning. We made 500,000. I'm sorry, I made 2,500%, 2,500%. And then I sold later in the day. I said, sell. Anybody who owns any more, sell it now, up 5,000%. And there were people who claimed, I couldn't prove it, but they claimed they made over 10,000. Theoretically, they absolutely could have, because it did continue to fall, as you can see, continue to fall over the next couple of days. So again, these are the types of things we're doing. Now, this past week in the chat room, it wasn't something I took advantage of. People who it seems so obvious now. Why the hell didn't I do it? But we had a Walmart. Remember what happened with Walmart? Walmart, they reported really bad earnings on Wednesday. The stock got absolutely crushed. And the person said, hey, if Walmart's going to go down, we have Target reporting tonight. This was Wednesday night. And they said, geez, last night Walmart reported poor earnings. I'm betting Target is going to report really bad earnings as well. Well, not only were they bad, the stock got hit a lot worse than Walmart did. Dropped 25%. The people, I cannot take credit for it. It wasn't my idea. In fact, I didn't get into the stock. But the person bought the puts, made 2,000% on their return. So you can see we're a team. We have a lot of people in this chat room that are sharing ideas all the time. It's not just mine. People sharing, and people. This person was not the only person to get into it. I don't know how many others did, but it was ridiculous. It was such a smart trade. Why I didn't use it, I don't know. I don't pretend to be perfect by any stretch of the imagination. But Walmart was lousy. Target's not. This is not rocket science. You don't have to be a PhD from MIT or an MBA from Harvard to follow that thinking. And I just saw that Target was down. I thought, well, maybe some of it's already priced in, and I missed a great opportunity. But there were many people in our chat room who did not. So again, this is a type of situation that we're going to be continuing to see as the rest of the year goes on. I could give you, several other several other instances here. I mean, just what's here, earlier in the month here, where we bought some SQQQ calls. These were, remember, we bought them earlier. Here we made 116% in one day. We bought them about mid-afternoon on the 11th, sold them the 12th, up 116%. So we more than doubled our money. Here's another one where earlier in the month, again, 78%. Well, we held them for 3 days. They were up 17%. It's like, okay, but wait a minute. It's like, so that's only 17%. That's not much. Here we made 71%. And 71%. How many stocks go up to? I mean, if you own a stock and you're just trading individual stocks, how many of them go up 71%?
Really quick here, Matt. Just want to give a big a shout out here to Marvin, the newest Inner Circle member. Let's go, Marvin.
Thanks for joining, Marvin. It's great to have you aboard. And I just can't. I won't bore you with just showing more examples. But again, this was earlier in the month where we made almost 230% in some QQQ puts. Again, all these people are losing money. A friend of mine told me I've lost 40% he told me he lost 40% in his growth fund this year. And I'm like, oh well, sorry, we're way up. And we had talked about the market, and I told him my concerns, but I can't. Can only lead the horse to water. Real good guy, real smart guy, but he doesn't work in the business. He does stuff where he just doesn't have the time to be able to trade actively, and that's fine. He's going to do very, very well. But these are the types of things that I just want to go back further. I just want you to show you some. Oops, I'm going the wrong way. I apologize. But just to show you that we've been doing it all year. Here's an April where we made 200% on some. Here in the VIX calls where we made 82%. And just you can see that, and this was over more of a swing trade over this was over a couple of weeks where we made 82%. Okay, well it's funny. You can see that the options we bought were the May 18th, but we traded. See down here, this is April. The expiration date was in May, but the trade was done in early or mid-April and sold in late April. So you can see. Whoops, I keep going the wrong way. But again, here's some call options in the QQQ. Again, these are all in April, and then we talked about the FXI in March. Back in February, we made. I think this was the NVDA calls. I'm sorry, I don't have the thing up here, but made 300% there. So you can see every month, and most weeks, and again, we're just showing you the best ones. And I guarantee you, we do not win on every single one of them. Absolutely, there's some that don't work. But the key for us is risk management, getting out of the ones that aren't working. Yesterday, I went in and bought a decent number of calls, thinking the market would rally yesterday. I sold them at a loss. I just said it was a very mild loss. But let's go. I'm going to escape here a second.
And Raouf, I don't know if you know Raouf.
Oh yeah, absolutely.
So he is in the he's in the YouTube chat, and he says I had over 100% on those QQQ calls in less than 30 minutes today. He's talking about the trade he was talking about. It's crazy that like you can actually do this, and because here's the thing, Matt. I've talked to thousands of traders around the world, right? Because keep in mind that for everybody to know, this is an international chat room where we have people from every corner in the world that you can imagine, and everybody there is just amazing to work with and trade, and everybody gets along like a team, like Matt said. So it's just crazy because I talk to some people on the phone, and it's like, hey, I'm sitting on the sidelines, but then I'm looking at the chat members of your chat room, and these people are like, 2, 3, 4 baggers, and it's such a difference, right?
Yeah, and that's as I was saying, that's the thing, and like I said, I've been doing this a long time, but boy, there's some people in here, some just time and time again, showing us some great ideas, and that's the thing is it's not just they come in and say, what do you think of this idea, and I'll be like, oh, that's a great one, or hey, I don't like that idea for this reason, or so I want to hold off for this one for a little while. But you come on in. Sorry. Excuse me 1 second. Hi, how are you? Have a great weekend.
Thank you. We do.
But anyway, so okay. I just wanted to go back to this. Remember, I mentioned we bought these QQQ calls that we made 100% on, over 100% on today, but on the TQQs, which is basically the same thing. They're just the leveraged ETF rather than the QQQ ETF. Yesterday, okay, I came in and wanted to, I came in and let's do, because this is going back, that was just the chart for today. This is a 2-day chart. And I kept thinking this thing was going to break out. This rally was going to work. Okay, it didn't work. And then this rally was going to work and it didn't work. So right in here, I think it was right in here. I can't remember the exact one, but right in here, I was like, I put on, I say a big trade, but I had a decent sized trade. I really thought the market would rally. And I just said, okay, I'm getting out. I'm just cutting back because for me, for what the bet I was making, it needed to happen right away and went sideways. I be honest with you, I can't remember. I remember thinking I was going to make a very tiny profit because it hadn't gone down. But I actually think by the time I did the trade, 2 or 3 minutes later, I made a very small loss. But it didn't matter. I was like, okay, it's not working. Time to get out quickly. We don't, believe me, we don't always, we're not doing that often, but with the kind of liquidity, the kind of volatility we've had recently, we have been doing that very, very quick trades. But that's the point. We got to get, it's risk management. Get out of the trades that aren't working and let the good ones run. And then, so in other words, I had a really big bullish bet. I say really big, take it back. I had a decent sized bullish bet here. It didn't work, so I got out of it. And look at it, say, if I'd held on to it, look how much it would have gone down. And then here, now don't get me wrong, I did buy some more in here. Some people sold them right at the opening. I held on to mine. They didn't work out very well, but we got, it's, again, they weren't, it wasn't, we way more than made up for it, because the one we bought here is very small. Okay, and then way more than made up for it right in here. Remember, we bought those things and they just took off. We told you earlier today. So the point is risk management. It's not working, get out, take small losses. Sometimes you have to take bigger losses. But the point is, when you're in the options, those gains are so big that, again, options are risky. I don't want to say that, you join this chat room, you're going to make $1 million overnight. That's not what I'm saying at all. There's a lot of risk involved, and we're helping each other talk through it. Hey, I'm getting out. This isn't working. I've lost a little money. It's okay. But too many people, they lose money and they just say, oh my gosh, I'm going to wait. I'm going to hope it comes bounce back. It's like, hope is not a good, it's a horrible trading tool. You do not want to use hope. Get out, take your losses and move on, because you can more than make up for them, because the options, again, you make these things where if you're in a regular stock and the stock's down 20%, you sell it. Boy, you buy another stock, to get that 20% back is going to take many weeks, many months in most cases, right? And these things, you can make it, especially in this volatility, you can make it very quickly and make it back and then some. But the other thing is too, is when we get these profits, what I did in here when I made that bet, it was like, yes, I knew it was a very risky bet because the market was chopping all over the place. But because we had made so much money the previous week in those Apple calls and those TQQQ calls, that I was willing to take a little bit more risk. Again, I wasn't betting all my profits. It was just, but it was bigger than I might normally do. And I took a small, here I was willing to do it because I have some nice profits. And when it started to run, I just let it run. I sold a little bit right here and right here, and the rest literally in the last minute of trading. And I actually am holding on to a few small, about 10% of the position, to see if we get any follow through from yesterday. But this position made way more than, made way more, 170% or so on the position. So if the market crashes on Monday and that goes and my calls go to zero, I still would have made a huge profit in it. I don't worry about that. Again, that's risk management. Now I'm going to leave a little bit more. Now, there are times where I sit there on a Friday and say, I love this market. There's no way this market is going a lot higher from here. I'm going to hold on to these calls or in some cases puts over the weekend. Didn't want to do that. When you make that big of a profit, basically. Right. 2 times your money in half an hour, get out and go on.
And Monty, what's up, Monty? Monty's in the YouTube chat. I'm sorry, in the Zoom chat. It says Matt is outstanding, well worth the membership. Thanks, Matt. Monty from Boston.
Thanks, Monty. Go Celtics.
And yeah, no, definitely, man. I could definitely tell you it's a great environment there. And so, can you explain a little bit about the Tuesday session?
Yes. Yeah, and before, I will definitely do that. And before I do that, though, I do want to say that the whole idea, and again, I'll let the people in the chat room, but the whole idea is that the whole is to have you way more than pay for the cost of joining the chat room. And I cannot tell you how many people said that they've been able to do that very, very quickly. I mean, if you go take a lesson in golf and the guy makes you a better golfer, that's great. It gives you satisfaction, but you're not getting that money back. The money's gone. I mean, and it's okay. I mean, we all spend lessons to better ourselves, to get people to help us better ourselves. And even though it may not be a monetary return, we feel really good about spending that money because it makes our lives happier or whatever it happens to be. In this case, hopefully it makes your life, make your life happy because you made some more money. Money is not the most important thing in the world. We all know that. But the whole idea, you put the money in and it pays you, and you more than make up for the cost. But let's talk about the Tuesday session. The Tuesday session we do I almost said Tuesday session we do on Wednesdays. Okay. Anyway, Tuesday sessions we do on Tuesdays, 11 o'clock Eastern time here in the United States. It's the Eastern time zone. And We now, Rodrigo set it up nicely so we can go more than half an hour. So because especially nowadays with the way the market's been going, there's so much going on, and a half an hour doesn't always cover it. But we talk just like this, and I pull up my Bloomberg and I show certain charts. I talk about macro pictures. We do some tutorials sometimes about some of the technical analysis we see. The chat room is the chat page is open. People are asking questions, which of course they're asking all the time. But I can respond to them immediately and pull up the chart right there rather than trying to draw it up, paste it, or copy it and paste it onto the chat room. But this is something again we do. I do it on Tuesdays because I like to get into the week. I thought about doing it Monday, but it's like, let's see how the market trades then do it. If we did it too late in the week, it's like, hey, things could change over the weekend. So Tuesday is a good time. And again, we do it for about, I'm going to say, well, I'm going to guess now, it'll probably go half hour to 45 minutes. I don't know, we all have things to do, so I don't want to go much longer than that. People lose interest. But of course, if there's something really, really compelling, we'll take as long as it takes to cover it. But again, so it's not just we're chatting, but I will sit there in a live and people asking, what do you think of this stock? What do you think of that stock? And I'll punch it right out. It's like, what do you think of Tesla? Okay, and everybody cares about Tesla, and rightfully so. And boom, look at how it broke well below that 700. See how 700 was such a key level? Stop there. I mean, it got a little below, so it broke below it today. This stock, though, is getting oversold. Remember we talked about that RSI? So this stock is going to have to rebound in a big way and get back above 700. I don't know if that's going to happen. It looks like people are out for blood a little bit on Musk. Now with this, again, if the sexual harassment thing's coming out, but you can see people are seem to be going after him a little bit. And he was on the cover of Barron's, and ever since then, the stock's gone. He's been on cover of Barron's many times, but he's on the cover of Barron's 2 weeks ago. Tesla's gone straight down since then. Twitter's gone straight down, and it's that cover story curse that doesn't just work for the markets. It works for sports athletes and stuff like that too. But the last thing you ever wanted to be was on the cover of Sports Illustrated for something that was coming up. You love to be on there for winning the Super Bowl or winning a gold medal, but you didn't want to be the one on there saying this man or woman should win 5 gold medals, because it was always a curse. They never did anything. So again, these are the types of things we're talking about. Of course, we talk about macro all the time, and why about it? The whole idea is not just to give you ideas, but to tell you why we're making these decisions. It's not guesswork. We're trying to make educated decisions, not wild guesses. And like I said, in this kind of volatile market, we can make those things and have made some really nice profitable trades.
Hey, I want to give a quick shout out here to Ina Kovinev SFG. Welcome here to the family. And Brian, I didn't forget about you. You joined earlier. I know, man. No worries. I remember. You still get the celebratory air horn. Let's go for the both of you guys. Warm welcome.
Great stuff. Thanks, Rodrigo. There. So, welcome aboard. And I just think that this. I mean, I don't want to. We go back and for forever, so many people. Two things. Number one, like I said, we have the tools now. We didn't have them before. If you were a big hedge fund and you were going to pay somebody, hundreds of thousands of dollars in commissions each year, they would do any. They would form what they call an over-the-counter option and trade whatever you wanted to do. But for somebody to come in, even with $10,000 or even $50,000, to say I want to do this options trade, they said that's not big enough. It's too much of a hassle. It literally would not have been worth it to them. Now all the tools are there again because we have weekly options. 3 times a week options. We have ETFs. We have inverse ETFs. I'm sorry, and leveraged ETFs. One thing though, remember, leveraged ETFs are trading tools. If the market goes sideways, both puts and calls will go down. So be careful. They're not something you hold for long periods of time. But that's just an aside. But the key is that it's out there. The second thing is that you want to work with somebody who can give you the what's really going on, the real deal. I was calling for this thing for this at the beginning of the year. There were Mike Wilson of Morgan Stanley. I give him credit. He and I were about the only 2 people on Wall Street were saying you got to raise cash, you got to get defensive. And we've been saying I was asked on Bloomberg TV in London just over a week ago and said, all these people have changed lowered their GDP estimates and lowered their targets for the S&P. What changes have you made this year? And I said, none, because I've been saying this all year. I've been saying all year, raise cash on any kind of rallies. First of all, I said raise cash at the beginning of the year before the market went down, raise cash on rallies, get more defensive. And so I didn't have to change anything. But so much of what you hear on Wall Street is bullish. They're paid to be bullish. That's what they do. Now, some of them are admitting to be bearish because, well, that's real helpful. The market's already down 20%. But now they're just, of course, but they're saying, yeah, it could go down a little bit further. But their job is to keep the assets under. Do not leave. I mean, one time I had an interview with a firm. They did a phone interview before the initial interview was over the phone, and a very big firm. And they said to be a strategist. And I said, and they told me they really don't want to be a strategist. Your idea of the whole is just to convince people to keep their money in the market when the market goes down. I'm like, what? That's not being a strategist. That's just being being a cheerleader. And there's nothing wrong with that, I suppose. I mean, if you're working at a Toyota dealership, that's what you're selling. You're selling Toyotas. Whether you like some other brand better, that doesn't matter. That's not where you're working. That's not, you're working. And these people, they're doing this. And it's right. Don't get me wrong. I don't want to portray them as shysters or anything, but just saying that, and you should stay in the market with your long-term holdings. But if you have the inclination and the time to be a more active trader, I think it should, you come with us and we've shown that you can really do well and maximize those returns. Again, you want that big long-term, the bucket that has long-term trades looking 3, 5, 10 years down the road. But if you have that other bucket that you have the time to watch, this trading can really maximize your returns, and especially in a time when the markets are so volatile. People, they keep telling you, stay with us, we'll weather the storm. And I'm like, no, we want to profit from the storm. And the biggest thing is that when we get the real big washout, which I think is months away, when we get the real big washout and people are panicking and selling right there, it's right at the exact worst time. Not only are you going to have the money to do it, but you're also going to have the confidence to do it because you won't be scared to death. It's like, oh my gosh. And then what will happen when the market finally makes a bottom? Okay, then it rallies 10%. Those people are going to say, oh, finally rallied a little bit. I'm going to sell some more. Well, that money came pouring out of the market in 2010, 2011. You look at all those mutual fund flows. Every time the market rallied, people got out. We won't be that way because we'll be the ones saying, oh my God, I made money on the way down. Now the market's bottomed out. Now the market is actually cheap. And now the market's running on its own, not just relying on Fed liquidity for it to run. It's going to come bouncing back because every time the market gets incredibly overvalued like it was at the beginning of the year, it usually shifts to undervalued, and you're going to pick up some great gains. And as the market goes up, you're going to keep adding to it. Instead of selling on strength, you're going to be adding on strength, and it's going to keep. It's going to be like you buying. You're going to be one of those guys who was buying with both hands in 2010 and 2011, while most people on Wall Street were selling and then getting back in 2015 or 16 or whatever later in the decade, or maybe not until the meme stock trades a year ago. And that's not what you want to be. We want to be the people that are taking advantage. And again, before we didn't have that ability, now we do because we have the tools to do it. And it's just, I say it's a lot of fun. Today was a great fun day, especially at the end of the day, because we made so much money at the end of the day. Again, we look at many different markets and because we're always looking, where's the volatility? Where are the opportunities? For so long, people say, I'm going to make $1 gazillion in the stock market. I'm going to buy the next big thing at 5 cents a share, and it's going to go to $50 and I'm going to retire. That's great, but trying to find that is very, very difficult, and it takes a lot of time. And again, I'm not trying to say that you trade these and you're all going to be millionaires by Christmas. But what I'm saying is that the opportunities are out there, and you can buy. Look at Apple Computer; we made 400% in a day. It's Apple Computer. I mean, they're a great company, but they're not rallying 70%. I mean, the stock goes up 5 or 6%, but their options are moving. And so you can have a good, solid company in this kind of volatility and really make the money. That's so often, people last year made a lot of money buying AMC. Why? Because they had a big short position. That's the only reason. There's nothing fundamental behind that. And that's fine, but that game's over. The meme stocks, people have lost so much money. And let me just talk about one other thing here. What's going to happen the rest of this year? Now, was this rally today? I'm sorry, this sell-off today, is that the beginning of a longer-term rally? It could be. We're just going to have to wait to see how things come out. Now, you hear people. You hear, go ahead, buddy.
Before we do get here into the whole session here, you are familiar with David from the chat room, David Investor.
Absolutely.
So he's on the YouTube chat. You guys can go verify this if you want. And I know him in the chat room as well. This is what he commented, right? So I've been with Matt since January. He knows the market better than anyone I followed. Daily access to him is profitable and educational. I made 10x on TQQQ calls in the last 30 minutes today. That was fun. That's from David.
10x, okay. This is, this is the 10 times your money. I'm not gonna. I would wish I could say, we do that every day. We don't, but we get some really nice trades, and my point is, there's so many people out there, and you have these chat rooms, and you got 30,000 people in it, and all they're really doing is trying to pump and dump. And a lot of times it's some guy in a hedge fund who's pretending to be an individual trader who said, hey, let's go buy this stock and run it up. They actually already own it. They get you to buy it higher so they can pump it up, and so they can sell it to you at the higher price, and the thing roll back. The old pump and dump that's been around for 100 years. We're not doing that. If you lose money on a trade that I've told you about it, I've lost money. Now, there are times where I say, hey, I'm not going to, I get asked, hey, well, do you like XYZ here? And I'll say, that is a good idea, but I'm not going to trade in it, but you might want to look at these options. Okay. That does happen, but I let you know that I tell you, I'm not going to trade that. But if you want to trade it, this is what I would buy, which put or call I would buy. But the ones I do, and I post every single one of them, and I post them when I do the trade. I don't, buy it and then wait 10 minutes and then post it. Let's say I could put in 5 trades and only tell you about the ones that work. No, we tell you when it trades, and I tell you when I get out. Tell you when I get in. Tell you when I get out. The only time I don't tell you when I get out is that sometimes you let, especially on the smaller ones. Every once in a while, I'll say I'll buy a tiny one of this, and it's such a small thing, it's not working, and I'll say, hey, if I sell this thing now, I'm going to sell it for $18. I might as well just, God, anything can happen in the last 3 hours. Maybe it'll bounce back. Who the heck knows? And I just let it expire. So I don't say that because it's such a small position anyway. But I let, it's like, it's a tiny, tiny position. Whenever I sell it, about it. And there's no futzing around there. When I buy. So I guess the key is, I don't make any money by churning your account. People can sit there. I'm not a broker who sits there. Every time you do a trade, I get a commission. That's not it. I don't make any money on that. The only money I'm making is if I call a good trade and you hear the trade. If I lose, if the trade that I've given you has lost money, I have lost money. And but I make money, you make money. Okay. So it's not. I'm not just throwing 10 things out there and hope one of them sticks. And then tell you all about all the winners and forget to tell you about the losers. You'll about it. And as Dave said, you can make some real big ones, and that's what we're looking for. We're plucking around here, plucking around there, and then we get the FXIs, we get the TQQQs, we get these things. You can really make some real nice money in the last on certain trading days when the timing is right. This is again, the point is that I'm not selling you something so that I'm selling you something that hopefully you'll use and you will make that money back many-fold, okay? And it's a one-time thing, and as Rodrigo will tell you, when you roll over next year, no, we're not going to make it to you. Whatever the price may be a lot higher this time next year, or maybe a lot higher this summer. The way we're going, we'll probably should start charging more money. But you buy now, that's the price you will re-up at a year from now. You get a seven-day free trial. After 7 days, you don't like it, you just pull the plug and you're out, and that's fine. So, worst case scenario, this volatility is going to stay high, almost certainly next week, and I think for the rest of the year. Now, will we have the last week of July, after earnings season, or first week of August after earnings season is over? Will it be a quiet week? A lot of people, sure. And that's the other thing too. If there's no ideas, I'm not going to throw out 10 ideas if there's no idea. There's always something. So I'm, but if there could easily go a whole day without an idea. I just say, nope, there's nothing to trade today. It's too quiet. Some days you just want to sit on your hands. And if that's the case, that's what we'll do. I'm not, again, I don't get anything by making you trade more. I'm all, the only way you're going to stay with this thing is if I give you good ideas that you make money, and then other people in the chat room give you ideas that make money, and that you come out ahead of the game. The market is down a lot, and I'm way up this year, and most of the people people in the chat room are too. So at least the trading part of their account. Now, again, some people may have 90% of their money in a index fund and this trading account, so they're down. Who knows? But I just say that the trading we've done has been highly profitable this year, and we, I just hope you considered coming along. I think we're going to really, again, the record is there. It's not just one or two trades. We've been doing it on a consistent basis, and I think we'll continue to do it as the year goes on. Now, talk about why I think this. I mean, one of the big things, I don't want to get too lost here into the weeds, but let's just talk a little bit about my macro view. And, again, the beginning of the year, I saw it was coming. Too many people in the market didn't realize how important the Fed was in adding all this liquidity to the marketplace and how much of an impact that had on the stock market. And people are saying, "Oh no, interest rates are low, and that's why the valuations were so high." And I was like, "No, that's not why." Because and all this stuff that everybody's talking about now, I've been talking about since fourth quarter of last year, saying how all that liquidity out there in the marketplace is that was the thing pushing it too high. And I kept saying we kept emergency level of liquidity on past the time that the emergency in the economy had passed. And I'm not trying to pretend I was the only person saying that, but most people were saying, yeah, they did, but don't worry, we'll be able to do this, we'll do that. I was saying, it doesn't matter if we have a recession. They were all focused on whether we're going to have a recession or not. I said, it doesn't matter. Okay, we pushed the liquidity had pushed the stock market to such ridiculously high valuations, had nowhere to go but down. Even if the economy kept growing, we had to have a deep pullback. Now we're going to have a recession. I don't, and there's so many people on Wall Street. There's a few now finally admitting we're looking for a recession. But as I was saying, I said in March when Goldman Sachs came out and said they see a 35% chance of recession, I said, hey, people, if they're saying 35, they really think it's about 80%, because no economists, for job security reasons, the only time they're going to tell you it's more than 50% is after we're already in the recession. Okay? That's how Wall Street works. Okay, they're paid to be bullish. And that's what all these strategists do. Even the ones now who are admitting, okay, yeah, I give Mike Wilson a lot of credit. He's been, but a lot of them have been all the way down. Even when they get bearish, they say, oh yeah, but we're almost there. I'm seeing capitulation. The market's getting fair value. All this stuff. The market's not at fair value. The stock market. All we've done. We haven't even met. All we've done is taken back what we would have had with the liquidity. Okay. It's funny, one guy I was talking about today on CNBC, and everybody saw it. He took it right from, he really, I mean, I've talked about the E part of the PE ratio yesterday in my morning piece. He said exactly that. He used my terminology. It was why he wouldn't, I mean, I know he reads my stuff, so he should have given me the credit. But anyway, the point is, though, is that earnings, as GDP growth has been cut by more than half since last October. Earnings growth has not. How can you have a GDP? How can you have the economy growing half as much as people were expecting in October and not have earnings expectations come down at least somewhat? Okay. Now we saw this week that comes into question. Why? Because of the inflation thing. I've been saying since this time last year that inflation would not be transitory. And at some point it eats into margins because they can't pass along those price increases to everybody. If their costs go up, they have to do two things, either pass it along or their margins shrink. If their margins shrink, their earnings have to come down. What did Walmart talk about this week? Shrinking margins. What did Target talk about this week? Shrinking margins. What did John Deere talk about this week? The big tractor, farm equipment and bulldozer thing. Shrinking margins. Earnings estimates are going to have to come down. Okay, so therefore the E part of the PE ratio has got to come down, and therefore the stock market, which is now trading at about 17 times earnings, is going to have to fall further. Now, as I've been saying, is that in 2018, the market didn't stop going down until it reached 14 times or 14 and a half times forward earnings. Okay, the last time the Fed tightened. Okay, so we go to 14 times earnings. If the earnings and estimates don't come down, which they almost certainly will, that takes the S&P to 3,300. If the S&P earnings do come down just to flat, I'm not talking about negative earnings, I'm talking about flat. Okay, and we're going to have to go below 3,000. That's not necessarily my base case, but earnings are going to have to come down. And again, there is so much leverage in the system. When you de-leverage a market, okay, you have to sell. It doesn't matter. People say, what are they going to do with the money? I was like, well, they're going to have to put the money somewhere. No, you don't understand. They have leverage. All these hedge funds, when you go and leverage in your own account, you can have a certain amount of leverage, and most people don't add a lot of leverage to their account. Okay, put a lot of margin debt on, but hedge funds do it, and big institutions do it all the time, and they can put on huge amounts of leverage. Okay, so what happens when the margin call comes? They don't take the money and go. They don't. These people. This one clown is sitting there saying, I'm sorry, shouldn't say clown, but this one guy saying, oh, the bond market's going down and those people are going to sell their bonds. Where are they going to put the money? They're going to put it in the stock market. Well, I'm sorry, but the stock market and bond market, okay, as people, they trade in tandem. High interest rates, they trade in tandem. I say as the bond market goes up, interest rates go down, that's positive for stocks. People put money in both. When they sell those bonds, there's not going to be any money to put in the stock market because they're all leveraged. They're going to go to pay their margin debt. They're going to pay their loans. They're not going to have any extra money left over to pile into the stock market. Again, these people are bred. They've got MBAs from Harvard, and they never spent 10 seconds trading on a trading desk. They may have walked by a trading desk and yucked it up with a couple of traders and did a few high fives and wore suspenders a couple of times. But other than that, they haven't traded anything, and they don't understand how trading works. And that's why they miss the point that with all this leverage in the account, whining of leverage always takes us to go to swing. We're not going to stop at fairly valued. We're going to overshoot to the downside because people will have to meet those margin calls. That's number one. Number two, the next thing that's going to happen is that people are going to start shutting their doors and forced liquidations. There was this conversation this week in England where this hedge fund, Melvin, I think it's called Melvin Capital, Melvin, they closed their doors. This was not a liquidation, though. Just closing your doors is not a big deal. I mean, don't get me wrong, it's a sign that things are getting bad, but they're not being forced. They're just like, hey, we're down so much, we can't make it back because they can't split the profits until they get back above their whatever their high water mark is. They go down and it comes back up. No, they don't share in the profits until they get back above that high water mark. So what happens when they lose so much money, they finally just say, hey, we're shutting it down because it'll take us 2 years to get back to that. And we're not going to do that because we won't make enough money just on the small fees that we charge to run the money. And so they just shut down and they move it to a family fund. And then a couple of years later, they reopen and start again because they can start from zero. They don't have to go back up to that old high water mark. But those guys, what they do is they send a letter out or an email out to their investors and they say, we're closing down. And they go between now and the end of June, the end of the quarter, they slowly unwind their positions. They got plenty of time. They can take longer to do it if they want, unwind their positions and give their money back. What I'm talking about is companies that get have a run. I mean, where they don't have, again, margin calls and such, where they are liquidated. If you get a big hedge fund that's liquidated, like Long-Term Capital Management was 25 years ago or 20 some odd years ago, that's when you have the problem. Again, it's that forced selling, that margin calls. I've got to get out. I don't care how cheap the stock is. I don't care how oversold the stock is. I need to get out to meet my margin call. Okay. And that's what they do. And so we're going to see more of that, and we're going to see certain banks. Oh, they're going to have write-downs because suddenly, some big hedge fund had a liquidation and then couldn't meet their couldn't meet their requirements, and so the bank had to meet their obligations. So that hurts bank stocks. Again, we're not as fragile the banking system unless it gets really bad. We're looking at more what happened in 2008. I'm sorry, in 2000 to 2003 than we did in 2008. 2008, the financial institutions were all imploding. Okay, in 2000 to 2003, a lot of stocks went down, but nobody was worried about the banking system going under. I'm kind of thinking that's the same thing, is that a lot of stock are going to be unwound, and that's, it'll take time. Now in the Fed, before anybody else was saying the Fed put is no longer, I was screaming it to the top of the mountains in the fourth quarter of last year. We got to get out. We got to get out. Because the Fed is no longer going to care about the stock market. The reason people, they only care about the financial system. They had to pivot in 2018 because the high yield market was imploding. They had to add all that liquidity in 2020 because the global economy had come to a complete halt, or almost a complete halt. They had, if with that happening, the financial system, the financial workings, the bond market is the real inner gears of the market. And when those things shut down, that's when they have to come in and save the day. They don't care if the stock market goes down and the financial markets are still working fine, they will continue to let them go down. They've said that. This is something I've been saying since the beginning of the year. Now everybody's talking about it, but all those people are talking about it now, they should have been telling you about it then, because you would have been able to sell your stocks and you wouldn't be down 20 or 40% or whatever it is that some of these people are. It's a disgrace how these guys missed it. But anyway, I'm getting a little worked up here because it just seemed it was plain as the nose on your face what was happening. But what happens is human nature. Everybody thinks, oh no, I made all this money the last couple of years because I'm smart, not because the Fed basically injected the markets with steroids. But that's what's really what happened. And that's why, if you're going to be an active trader, this is where you want to be, talking with people. Know this is somebody who can see what's going on in the marketplace and see that the market's going to rally in a big way in the last half hour of the day, so you can make several times your money. And in the case of David, made 10 times his money. I was a different option and made twice, 3 times my money, whatever, 200%. But this is how things work. So I kind of rambling on here for an hour or so, but it's so key because this situation has not come to an end. It's not going to come to an end until we get that big blow up. Remember Lehman Brothers, even Lehman Brothers. Well, that's different. I'm not calling for that, but you'll have some big blow up because it's inevitable. There's too much leverage, not just, again, we looked at margin debt, and that shows about how individuals have too much exposure, but it's also going to slow down the entire economy. Why? What are you talking about? Well, all this free money, okay? Mike Novogratz was saying the decade of free money is over, and it's all that money. So where did it go? Okay, we had all this extra money because the Fed kept feeding the money. They're buying the bonds. They're feeding the money into the marketplace, and the banks took the money and loaned it out. But they had so much of it. They said, "Well, nobody, we've got more than we need to help the economy, so we'll put it into the markets." But they didn't put it into the stock market or the high yield market or the corporate bond market or the treasury market. They also put it into venture capital firms, and they put it into private equity firms. And so these private equity firms had hordes of money, and every little Tom, Dick, and Harry, or Susan or Jane, who came in pitching an idea, I want to start this company. Great. Here's 20 million bucks. Go see what you can do. Here's $100 million. Go see what you can do. That money is disappearing. Okay, so all those hedge funds and private equity firms are not going to have anywhere near as much money with the Fed pulling on their horns to the degree they are. So that's less innovation, less new companies, fewer people who are in the tech whatever area of the business might be, who are suddenly saying, "Oh my God, I started a company. We went public. I made $1 gazillion. I bought 3 houses." Again, it's not going away. Innovation is not going away, but it's not going to be to the degree that it used to be, because we had all this free money. Okay, the great financial crisis, getting out of that, Ben Bernanke decided that the way to do that was to make people richer, to make the asset prices go up. That was his. He said it publicly. That was his goal, and then that in turn would help the economy. Where in the old days, it was, let's help the economy, and the stock market will recognize that and go up, and it would lead the way up, but it would recognize it. Now it was like, no, the stock market's going to be the engine taking the market higher. The same thing happened after the pandemic, but now the Fed's like, oh, we can't go on like this forever. People are dumping on the Fed left and right, but they couldn't keep that liquidity flowing because it was creating a bubble, and it would have created worse inflation. So they pulled in the horns. They did it too late, no question. But people are pointing at them where they should be looking in the mirror, because it was as plain as the nose of your face is what was going to happen. And too many of the pros on Wall Street either didn't recognize it or are paid to be bullish, so they didn't tell people. That's, like I said, that's a disgrace, and we don't do that here. We make money trading because you get the real story about what's going on. That's really kind of my spiel. I don't know, Rodrigo, if you want to go over a couple, I can go over a couple of tickers, but
Yeah. So here's the thing, right? Let's talk. All right, man. We've been doing this. Look, everybody knows you're the man, right? You put money in people's pockets, especially in this time in this economy. I'm telling you that the members are so grateful and happy. So am I. I mean, you've done well, right? As for since I've been here, you've always been on point. Ever since we've done every webinar, everything we do, it's like you've called every single correction. You've called, and the margin of error we're talking about, like really short. I remember when you were talking about Microsoft, but let's talk about NVIDIA, right? Let's not get sidetracked.
that was a good. That's a good another example of how I was way early.
Yeah, you were early. You were talking about margin debt before this stuff, and that's the thing. Like when people maybe they look at all these other news places, it's just pump, pump, pump every day, and that's the thing. Like it's different when you have a trading group that actually is there to help each other instead of taking cues from reporters, and headlines.
Well, it's and again, the reporters, I've no problem with the reporters. They're good people, and they're working hard and do a good job. It's the problem is the people, the pundits on the rest of the street from these other firms that are the ones that are, just they're again paid to be bullish, and so they don't give you the full the real story. One thing though, before we do two things. Again, number one is Microsoft, and what Rodrigo was alluding to is that I just talked about this. And people seen that webinars before, but it was just such an obvious thing to me. Right here, the CEO sold half. Great CEO. Nothing wrong with Microsoft. Nothing wrong with. He is an unbelievable CEO. He's done a great job with the company. But his stock went way up. But not his fault. The stock went way up. But he saw what was going on. He saw what the Fed was doing, and that's my speculation at this point. But the fact of the matter is, he sold half of his personal holdings right here, and then right here he sold. More, a total of 2/3, a total of $374 million of Microsoft stock. And I said, insiders don't sell that much unless they really feel the stock is going to go down and stay down for a couple of years. Now, that doesn't mean it's going to stay at its low or it's going to keep falling for a couple of years, but it's not going to get back to that level for a couple of years. Believe me, he doesn't care. He had plenty of pullbacks along the way when the market was going up. 20% pullback, no problem. Our business is great. The market's great. He saw what the Fed was changing. He saw the big change in climate where that free money that Mike Novogratz was talking about was coming to an end. He decided to pull out. He still kept some of his money in there. And we've seen it so many times in the past, especially with companies going public. I won't go through the list again, but just to say that it's no surprise that Goldman Sachs their partner sold their stock in 1999 to the public. Because they saw the bubble, and then the next year the market crashed for 3 years. And so, smart people sell and sell in a big way. If they just want to sell $10 million to buy a house on Nantucket, that happens all the time. When you sell 2/3, he has saved himself almost $100 million. If he had sold this week instead of that week, he would have sold it for $100 million less. $100 million less. So again, that's the kind of the expertise you get from me. I've just been doing this for a long time, and I see it happen. The other thing, I said I had two things, and I can't remember what the other thing was, but just to talk about the stock market. And let's talk about what next week. We had this big rally late in the day today, but it only took us back to unchanged. And you can see with the market, we're at a key level. Oops, no, that's right. I did the wrong thing. I do that every once in a while. Instead of hitting SPX index, I hit SPX equity. But you can see here, is this making a double bottom? Because it's a little bit, you can see it's a little bit lower. It's getting oversold. I just don't know for sure. But we do know. See, just even let me get rid of these lines. Look at this here. We've already seen Okay, nice rally there. Nice rally there. That was almost 10%. A little bit of bounce there. We're going to see more rallies like that. And I've said in other seminars, that's exactly what happens in every single deep correction or bear market. You get big rallies along the way. And I won't pull it back up because I've done it a million times and people get bored with it. But you go back and look at from 2000 to 2003, from the end of 2007 to the lows in 2009, how they got these big rallies and everybody thought the worst was over. We're going to see more of those, and we want it. So I'm not, as much as I'm painting a bearish picture, and I think the market will have to go lower over time. We will see bounces along the way, and we want to profit from those as well. Just and just like I did with that Apple just the other day, last week, made 400%, over 400% on trading Apple on the buy side. This is what we can do, but you need to be nimble. And again, there's some people and their jobs, we do swing trades where it can be something for several days. And again, we have that other room. You can punch it in and sit there and say, hey, I've been doing my job for the last 3 hours and I'm just taking a break. I punch it up and say, oh, Matt, an hour ago, you said you bought this. And you can just write to the chat room and say, hey, you bought this an hour ago. Is it still a good idea? Yes, it is. Go ahead. Or no, something it's not as good, but maybe you buy a different option, whatever happens to be. People I don't get as much as I probably should. Don't be afraid to ask that question. If you see something and you're away from the desk and you think it's a good idea, but you know that you can see, because everything's timestamped, you can see that it's an old post from maybe an hour, maybe two, ask, is this still a good idea? Because if we bought a call option and the thing rallies in a major way over those 2 hours, and let's say, I might say, hey, no, don't buy it here. In fact, we're going to take profits. Or I might say, yeah, don't be as aggressive now that it's up a lot. I think it can go a lot higher, but
Right.
don't be as aggressive. So we're constantly working on that in different ways. But my point is that next week is going to be a critical week in the market because do we do a double bottom? We got down at my target long before as anybody else, well, not anybody else's, but I've been talking about 3,800 for a while. Well, about a month ago, that became everybody's target. And we did, for all practical purposes, we reached it today. We got down to 3,810. So can we bounce off that support level? I think there's a good chance. I'm leaning towards the bullish side for early next week, but what we're going to, we'll have to look how things open next week. We'll have to see what goes on because again, a lot of money has been lost, not just in the stock market, but in all the other markets I was talking. We know about cryptos, high yield market, right, corporate bond markets. We could have a blow up over the weekend that could cause some problems, but we'll be ready to go in a big way Monday morning.
So there's a lot of chatter about semiconductors. Can you hear me?
Yes. Yeah.
Can you hear me? All right. There's a lot of chatter about semiconductors on the other side of the world, right? By where like China is
Right.
I think I don't know which company it was that reported earnings for chips, and it wasn't good. They had like a bad outlook, I guess. I don't know the company, but what is your take on that whole situation? And and if you want to dig into NVDA there as well,
I'll talk about three different things. First, just the SMH, which is the semiconductor ETF, and we'll talk about the CIAC. Lower low, so it's down here, lower high, lower low, lower high, lower low, a bunch of mini lower highs and lower lows. This is not good. So what we're going to be watching to see, can this break above 240? At least give us a short-term relief. If it does, it's going to be bullish. But on a longer-term basis, the first thing on a very long-term basis, and I just want people as you go through the year, if you don't join us on the in the chat room, understand, but you want to be looking at Intel. Not now, not yet, but if we do see a big sell-off, and especially in the October, September, October timeframe, which always seems to be what happens, this company is too big not to succeed. Intel, okay, and it was like, wow, they're behind the times. They are, but they're the only company in the United States who can manufacture chips and to the degree that needs to be done. And so the government is going to make sure they're not too big to fail. They're too big not to succeed. The government is going to make sure that they succeed because they have to, because we are way too reliant on Taiwan. And if a big blow up happens there, and there's some people who say it could even happen this year, but it's just, there's some, well-respected people think it could happen as early as this year, that they will try to make a move on Taiwan. Either way, if we lose the chips from Taiwan, I mean, forget about it. We do not make it. It's going to take 2 years to build that Intel factory in Ohio. Well, now it's about a year and a half. But as we go forward, this company, which is still a good company, they are too big to fail. Now, just want to look at something here. Citigroup, okay? Warren Buffett just bought a nice chunk of the stock, so maybe it's something you want to look at. But either way, Citigroup was too big to fail. And so they got bailed out by the government. They're too big to fail, but man, they haven't succeeded very much. Look at that stock. It's nowhere near its I mean, look at it. It's a joke. I mean, it's 100. It's not more than 100%. But I mean, look at it. It's 90%. It's not even close. It was a 549. Whatever. This stock is just ridiculous, right? So even though it was too big to fail, it hasn't been a very profitable company on a long-term basis. If you bought it down here, you a lot of other stocks you would have done a lot better with. Intel, on the other hand, they are too big not to succeed. So when you think the market is flat on its back and it's trading 14 times earnings or less, and you said, what are the stocks I'm going to buy? And because Intel is going to be very cheap, if that happens, Intel is going to go further. It's going to be very cheap. I mean, right now, it's trading at 11 times forward earnings, so it's inexpensive. Has a decent dividend yield of 3.5%. If it goes lower, that's going to be up to 5%. So they'll pay you to wait if you're not for a while. But these guys, so just remember that longer term. Intel can't. Not only won't too big to fail, they are too important not to succeed. There is a difference. Just remember that one. However, NVDA, and that's this is one of the was one of the best performing stocks in the market last year. We made some nice money on this one on both sides. But look at this stock here too. See how it's made kind of a double bottom there today, and it's very close. You can see it's never perfectly. It never stops at. Or I say never. It rarely stops at exactly the same level to form a double top or a double bottom. But you can see how close that is. Very, very close. If this thing can bounce back next week, it's going to be very bullish. And the reason why we talk about this one, I love to talk about this one. Again, this is something where we'll be able to trade it for a couple of weeks. On the plus side, look at this is what's called a MACD chart, what this it's a momentum indicator. You know about the death cross and the golden crosses. Golden cross is when the 50-day moving average breaks above the 200-day moving average. That's a golden cross. The death cross is when a 50-day moving average crosses below a 200-day moving average. And again, that doesn't happen right at the top. It's a momentum. It shows you that the momentum has definitely turned. This one is shorter term. It's the MACD chart. And it's the 9-day versus the 12-day, actually exponential moving averages. But anyway, look what has happened when it crosses. So negative cross there, negative cross there. Look what the stock did. But when it gets positive crosses, look at that. Nice rally there. Okay. Now look at this. On a percent, you say, well, it was an okay rally. It wasn't anything special, but it was pretty good. Well, I can't, now I've got a frozen thing here. But again, this is a rally that was about 30, 40. Whoops, here we go. See, it doesn't look like much because it's so much. But there's a stock rallied over 20%. The stock rallies 20%, you're making more than 100% on the call options. Look at the positive cross down here. Again, didn't get it right at the bottom, but look at that big rally. Okay, then we got a positive cross here. Look at that nice rally. Look at a positive cross here. Look at that nice rally. Here we had a couple of head fakes, so we got to be careful. Yeah, it's got to be a meaningful positive cross. Same right here. It looked like it was going to cross, but it didn't make it, so we can't get ahead of ourselves. And it rolled back over. It showed us the momentum was trying to get better. It didn't, and sure enough, the stock got hit. Here, got another head fake here. Now it's trying to break out again. If we can get a more bullish thing, more meaningful positive break, and we make a higher high after a double bottom, this stock's going to run, and we're going to be all over it on the bullish side. So again, this chips thing is going to be so important. I don't know what's going to happen with China and the U.S. It's not coming to it. This is not like we're 1940, the May of 1941 with the Japanese, and we're about to go to World War II. But it's not a great situation, so we have to be worried about it. So any bets we make on the positive side are going to be short-term ones, and because if they don't have the chips, I mean, my goodness, people working about supply chain shortages. What about we're not getting any chips because nobody's shipping them out because Taiwan is shut down. So we need to be very, very careful on that. And it's something that, again, we'll be watching very closely. But I just want to mention also, Advanced Micro Devices, a great company, great management team, great long-term prospects. But in the stock, and it was funny, some people in the chat room who said the stock could never break through 100, and I said, quite likely that it would break 100, break below 100. And sure enough, when it did, we made some real nice money. People made more than 100%. See how that was $100? See, let's get rid of some of these lines. Get rid of it. Whoop. See how it got down to 100, held there a bunch of times there, held there again. When it finally broke it, okay, it got clobbered, made on the puts. We made money in the calls. In here, I said if it breaks above 100, it's going to run. It didn't. Again, here, we'll just see what happens next week. But we're going to make money on both sides. This is a great company. It's going to go back to its old highs at some point. But that's the one thing. Is excuse me, sorry. People, it astonishes me how people get caught up on certain stocks and say it's such a great management team, it's such a good company, there's no way the stock come down. It's like there's a difference between a stock and a company. Sometimes the stocks of great companies get way far ahead of themselves, and so they have to come down and have to come down hard. And I've said a million times, Amazon has had while they've changed the world, they've had 24 drops of 20 to 60% just in the last 10 years. Forget about they had it went down 90%. Their earnings were increasing, their revenues were increasing throughout the entire decline coming out of the bubble, and their stock went down 90%. Okay, so if you looked at the fundamentals there, you would have lost and kept buying hand over fist, you would have lost your shirt. So you got to look at more than just those traditional fundamentals. And but AMD is one that we're at some point is going to be an unbelievable long-term buy. But on the way down, during this times of, look at all these opportunities. Nice rally, sell off, nice rally. These, you can make them for multi-weeks. The opportunities are there. They're going to be there for at least the rest of this year, and I think in the next year. And again, I can just tell you that I got a call a couple of months, about 2 months ago now, and as a person who said, I've been seen on I've been seen on Bloomberg TV, and I said, and the gentleman would like to speak to you. I said, who's that? I said, Carl Icahn. I said, oh, okay, yeah. Well, have him call me. Well, sure enough, 20 minutes later, I was on the phone with him, he and his son, and we were talking for an hour about the market. So he's not a market player as much as he is. He's obviously a takeover guy, but he goes into companies and tries to turn them around, et cetera. But he still has a lot of money on the sidelines and still wanted to know how he should best hedge his positions. That's probably more than 2 months now, but it was earlier this year. So those are the types of things that you'll have be able to see. And like I said, I'm not the only one making the calls, and we see it throughout the entire website, the chat room, and people really helping us out. But next week, the other thing I'm going to start talking about, I've been very, very, very bullish on the energy stocks. Okay, and I turned bullish long before anybody else, and I've been very, very bullish recently, and I'm still bullish. But I still have to be a little careful now, because noticing that there's been a high amount of insider selling, nowhere near what Microsoft CEO did. We're seeing an elevated level of insider selling in the energy names. Now, part of that, I think, is because they've been so down and out for so long that some of these guys are just trying to cash in. So this is not a serious, first of all, they're not, again, like I said, they're not selling hundreds of millions of dollars worth of stock, but they're selling at a higher level than they had for a long time. But like I said, none of these guys had made any money in their personal stock, and these high level executives in the energy area for a long time. So they're just taking a few chips off the table just because they're gun shy, and I can't blame them for that. That's number one. Number two, but the other thing that concerns me is that we're now, because one of my biggest bullish stances has been because of these sanctions are going to stay. The sanctions are going to stay on Russia, even if we have a ceasefire, and that's going to create a shortage of oil, and that's going to keep oil prices higher. However, we're starting to hear rumblings that they're going to shift it from sanctions to tariffs, which will still be very expensive But if it's tariffs, the oil will flow a little bit more freely out of Russia, and so with the natural gas. And even though I think demand will stay high and the oil prices will stay high, it's not as good a story. That scenario is not as good a story as I've been thinking. If the situation changes, you have to change your opinion. I'm not there yet. I still love so many of these stocks, and I continue to like them on weakness. But going to be watching this, monitor this very, very closely. So it could be a big change for me. And again, if the situation changes, I have to change with it. And no group goes up in a straight line. I mean, I just remember 2 years ago, 2.5 years ago now, when everybody said oil was, it was, I was a complete moron for thinking that people should buy oil stocks. Well, of course, it turned out to be one of the best calls I've ever made. Anyway, we've been doing this for about an hour and a half, and I know everybody. It's a Friday. People want to go off and do things. Rodrigo, I don't know if you're there, but
Yeah, what's up?
yeah, we kind of wrap things up here. But I think we've covered pretty much everything. I hope people get an idea of what we're able to provide, see the profits we've been able to make, and consider joining us. It's really worked out well, and it's an incredibly tough time in the marketplace. But with a group that we've put together, I think it's been a much better time, and I think we can. And again, especially with a money back guarantee, you can't lose. And if you don't like it, then you cancel and move on. But there's this year and into next year are times where active trading is going to be a must, and where a lot of people are going to just hold and or sit on the sideline, and that's fine. And maybe they raise a lot of cash and sit on the sidelines, and that's fine too. But if you like to trade, you like the action, and again, no. This is not an easy thing where nobody's, and I'm not telling anybody they're going to become a millionaire by Labor Day. But you can maximize your returns. And not only that, you're going to end up in much better position when the bottom does come. And all those people are selling, you're buying, and you're buying Amazon, a stock like Amazon when it's down 90%. And you hold on to it for 20 years and you retire on it, So that's what I'm really doing. And so I hope you consider it, and I hope you have a great weekend. And for those who've joined, thanks for joining. And those who are considering it, I hope you consider it. And we'll talk to you next week. And remember, Tuesday, 11:30, we have that Zoom call for members of the chat room. And we'll be talking more about what's going on right now and how we can make more trades like we did late this afternoon with the huge rally that I saw coming that I don't think a whole lot of people on Wall Street did, and that worked out real well.
All right, well, sounds good, man. Want to thank you a lot here, Matt, for helping out the retail traders, being there in the chat room, Monday to Friday, helping out these people, including myself, right? It's a career, right? It's a career, right? It's not fun. Well, it's fun actually, but it's a career. So the approach that you take is just really helpful, especially with a lot of misinformation out there. It's good to have that guidance from you, Matt. So big shout out, Matt Maley, Chief Market Strategist. Let's go.
Okay. Thanks a lot. If you guys want to stay on for a second, Rodrigo can show you the chat room a little bit better in more detail. And I know everybody wants to wrap up on Friday night, but thanks a lot. Good luck. And we'll see you in the chat room next week.
All right. See you there, Matt. I'm going to stay here, folks, showing you a couple things. Shout out to Matt Maley. Brian Maist excited to join. Good. I'll see you there. Good stuff. But yeah, guys, let me just pull this thing up here 1 second. I don't know if you guys got plans for Friday, but I don't. I'm going to be here with you guys. So yeah. Right. All right, I'm pulling it up 1 second. Okay. So that is the chat room, right? Let me open this a little bit more. All right. So there's two channels here for all you that just joined here, just so you know more or less how the chat room works, it's open 24/7. Matt Maley's there Monday to Friday, 9 to 5. And the chat room's ongoing. It's international, so keep in mind there's people from Europe, from all over the world, Africa, so so that it's pretty much, even though it's Monday to Friday, 9 to 5, there are people that are talking and engaging, communicating, just being part of the community, right? Just hanging out with other traders. It's a safe community where that everybody there is a real trader, a real human being, not a bot, not a fake account. This is not like these Wall Street bets or Reddit things, right? Everybody that's in the chat room is like a real trader, an inner circle member. So you can tell that these people are serious about this, right? We're serious about making money, right? And that's really the way you should want it. Um, so back to this chat room, right? So you can put sound alerts if you want, and you just have to click on these bells. And right now they're yellow, so that means that the alerts are on, and that's going to be it's like a sound alert, right? So just like I have this window tab open, that's literally all you have to do if you want to be part of the group where you can make the trade. Somebody is asking me if you can join if you're from outside of the US. Absolutely, man. It's an international community. Doesn't matter where you are. You can join. No worries. Okay, so sound alerts right here, right? So we got that. So, off, on, all right. Then you can like pick, like, let's say I want to block everybody in that chat room. Well, not block, but I don't want to get alerts every time someone's posting there, because they could be talking about a lot of stuff there. And really, maybe all I want is to listen to Matt, right? Get his trades, right? That's really how you're making the money. So this other channel that you see there, it's called Matt's Important Messages. Only Matt can post there. Very organized, very clean cut, elegant design. Perfect for you to literally just get what you need with a timestamp and everything when it comes to the trade, right? Entry, exit, contract price, expiration. Keep in mind the Tuesday session starts at 11:30 a.m. Eastern and only for inner circle members. And we go over education, trade ideas, market updates. Keep in mind, there's a lot of things that Matt Maley, this is his only trading chat room, so it's not like he's got a bunch of chat rooms out there. So basically, you guys are like family to him, right? He loves his members, he loves the users, wake up every day, make money with Matt. Once you start doing that, it kind of feels a little surreal, where it's like you're part of a group that's just really good, and is able to catch the volatility, of course, because Matt is the leader, but then you're literally on the passenger seat, just clocking in those gains, pretty much taking advantage of Matt Maley's 40 years of experience. And look, that's fine, right? That's why it's a premium service, right? You have somebody that knows what they're doing. You pay off your chat room within. There's no specific guideline, but I know people that have made decades of chat room subscriptions within their 7-day money back guarantee period. So people are making money within we give a 7-day money back guarantee period, and like there's people that are literally making thousands of dollars in these chat rooms. Like I went to this chat room and I was trading there the entire week. I made like $7,000. So that's why people get into the chat room, because it actually works when you're trading with a group, with a community. Obviously I'm very busy and tied up, but I was like, hey man, I'm just gonna dive in like like a full-on member, trade everything with Matt with my money, right? And it was a pretty successful week. Keep in mind the markets acted horribly, but that's the thing with Matt's chat room. The market could go up, it could go down, it doesn't matter. We traded either way. There's no emotions. We're just trading. That's it. So Matt's Important Messages is where you can find his trade ideas, entries, exits. That's what's going to make you that money. All right. CM question. How do we ask him questions if he's so there's two channels, CM. So Matt's Important Messages, only Matt can post, but you guys can read it, right? The entries, the exits, that sort of stuff. The inner circle chat where everybody else
and by everybody else, I mean the inner circle members. Okay, so um, this is where everybody hangs out, including Matt, right? Including Matt. So it's a fun gang. I'm telling you. Like I like being part. I wish I could be more part of it, but I have to work. So but it's definitely fun. Pop for me, honestly, popping in there for a week or two, making some quick money with Matt, and then getting back on whatever. So that's really how I use it, right? So, however, if you're trading full time or want to trade full time, then I think this is the best chat room for that. That is, because here's the thing: you're using leverage and strategy, timing, and experience. Usually you just can't get all those. And I don't know anybody with a more impeccable record than Matt Maley, who's been in Solomon Brothers, Merrill Lynch, managed Fidelity, BlackRock, two of the biggest hedge and mutual funds in the world, and chief market strategist at Miller Tabak on the analyst side. So he's got about 25 years of like actual head of trading division experience in the big leagues, right? And then he's got 15 years as an analyst, where and then you guys know him, of course, because he's on CNBC, Bloomberg. He's all out there, so he's got a following. He's a smart individual. That's really why they're bringing him back all the time at these places like Bloomberg and CNBC. And typically, this Bloomberg lady always interrupts our webinar and starts asking Matt questions in our live chat on the Bloomberg terminal. So I can tell you, like, Matt's in high demand, like 100%. And the fact that I was able to get him here for an hour, like, it's not that easy, because Matt's always busy in the chat room with the members. So, he goes out of his way to do these sessions and help you guys out here that are honestly just here to try to get some guidance, or, like what's happening with the markets or whatever it is. But if you do want to take it a step further, if you do want to be part of the community with Matt, I really, really encourage you and really think that you should give this a shot, because you have a 7-day money back guarantee. We are, some people say we're already in a recession. So many businesses are doing XYZ, and yet we're still here giving you that 7-day money back guarantee. So that speaks volumes to me, honestly, because that way you can try it out. If it's not a good fit, get your money back and move on, and that's it, right? So now what you're doing is not working. If your P&L is not as good as you would want it to be, and you keep doing the same things, which is kind of winging it, right? If you want to admit it or not. And then it's not working, right? So then, like, you have to try something different, right? There comes a point where you just have to come and face the reality. Look at your P&L. You know better than me. Um, the types of trades you've been making, and you know how volatile the market is, right? Now I'll tell you one thing: a lot of you guys haven't even been alive long enough that, like, even to cover how long Matt has been in the markets. Matt has been doing this for 40 years. Like, I'm 29, so he's been doing this for longer than I've been alive. So the amount of experience that you get in 40 years of doing this in the highest levels, when it comes to the actual roles that you have, it just can't get better than that. I don't know anybody else that has that kind of impeccable record and has a trading service, to be honest. But CM asking, I was looking to see if he explains why he's buying and selling. Yes, he does. He explains everything. So Matt is all about the education, right? He's every time he's making a trade, he's telling you why he's making the trade. And keep in mind, nobody has lived through what we're living right now, where you have a tense situation in Europe with Ukraine, like a freaking guaranteed recession in Europe, possible, almost maybe even there, recession here in the US. And you have a whole bunch of other stuff that's happening with inflation, rates, supply chains, China's zero COVID policy lockdowns. There's just a lot. There's a lot of moving parts. And it's really hard to navigate this on your own, understandable. And the best thing you can do, honestly, is to really team up, like start trading with somebody that really knows and understands these markets, not some like Twitter person or a social media person that you follow because you think you're cool. Like, when it comes to money, you have to be serious. And I mean, go with the professional, right? If you're gonna get knee surgery or some sort of important surgery, you want to get the best doctor out there, right? You want a doctor that has 40, 50 years, whatever, in the game, and he has tons of, a verifiable track record, right? You don't want to get that recent med grad, that's flashy, hottie, like you want to make sure that you go with the person that has the most experience. That's Matt Maley. The trades talk for themselves. Like they say, the numbers speak for themselves, right? Go ahead and try it. There's a 7-day money back guarantee. If you don't like it, you get all your money back. That simple. If you decide to stay, which I hope you do, because it's a great place to trade and learn and just grow as a trader, you're going to get a free laptop on the house. Okay. You're also going to get a secret special bonus from Rodrigo for your account. So that means that when you sign up, you're going to see a little special something something there when you sign up, right? Again, the laptop is separate. So if you do want to use this and take advantage of it, look, honestly, use it for 7 days, see if you make money with it or not, see if you like it or not, and go from there. But I'm telling you, it's definitely worth a shot with Matt Maley. And I'm just, I'm being honest with Matt Maley, it's totally worth a shot based on his qualifications, right? The man is the right man for the job, right? He's the person that you need to be trading with, because it does not matter if the market's going up or down. He'll find a way to make money on it. And he's looking for volatility, not just in US markets. Look at that FXI trade we made. Matt is a global equity strategist. If you don't know what that means, it means that he's literally analyzing global economies and reading about their markets. A lot of things that happen outside the US impact us here. We don't live in a bubble. We are kind of like a global, you know what I mean? So everything that something happens, look what happened with prices of oil and wheat with Russia, Ukraine stuff. So that's the sort of stuff, the volatility that Matt is always looking for. And the fact that he's got this role as a global equity strategist, it means that he's looking at a lot of things. He's looking at trade ideas, right? And his expertise is really where that kicks in. So CM, good question. So when I headline to decide deadline, okay, so this is going to expire in a couple hours. I don't know until when we're going to have the laptops, guys. But if you see a laptop on the checkout, that means we still have some. I don't know if we're going to restock because there's supply chain issues. So we might be running low on laptops soon. But if you see a laptop on the checkout, take it. All right. It's a courtesy gift. If you don't want it, give it to somebody that might need it and can make a better use of it. Give it to your child. Give it to a friend that needs one, right? Donate it. So many great things you could do with that laptop. Man, it's just unbelievable, right? But more importantly, keep in mind, the highlight's not the laptop. It's the money you're going to make in the chat room. That's the goal of this. That's the purpose of this. So CM is saying, if we buy today, does it start Monday? No, we'll start today. Because the chat room is open all day pretty much. So Matt, if he wants to pop in there on a Saturday, he can do that. He could do that. He has total, this is his chat room. He can do whatever he wants here. He wants to, if Matt wants to add another session because you guys somehow end up convincing him to, all you have to do is tell me. I'll set up the Zoom meeting, guys. That's it. All right. That's the kind of flexibility that we have here, because our true purpose here is to help the retail trader. Right? There's no grayness around that. That's what we're here for. So does that sound good, CM? And then, all right, let me make sure I don't miss any other questions before we wrap this up. Lewis, Morin, what's going on, man? So I'm on the YouTube chat right now, and I see you. I see you there, Lewis. Let me answer your question. So it's 70% off until midnight. The laptops might run out before. So if you don't see a laptop in the checkout, that means we're out of them. Like we're out of laptops. Mobile friendly, Paul, we're all about mobile friendliness. Everything here is friendly. It's actually even better because it's just a separate chat room. But yes, I mean, you can pop in there from your phone. Absolutely. You put on a browser, any browser, I don't know what you have, Chrome, whatever it is. I recommend using Chrome. Um, and you can get in there and put the sound notification. But personally, honestly, man, like I don't use my phone for having that chat room open. I put it on my laptop. Like when I'm trading and I'm day trading options, like I need a computer in front of me, you know? Like I'll use my phone to execute the trade, but I feel it's a little irresponsible to, to not really take the time to sit down, make the trade, have a computer there. That's why we're giving you guys a laptop, right? You'd be surprised. A lot of people are like really extremely like really thankful about this laptop. So it's and that's the thing. Like it's something as simple as that can help you. That's what we're here for. So um does that answer your question, Lewis? Mr. Lewis? And it's gonna renew, by the way, at the same price next year. So that means that there's no surprise hike price like, Sprint and all these Comcast nasty companies do. Like this is the same price and it's always gonna be the same price. That's the Rodrigo promise, okay? Know that. It has my stamp. So that's gonna be the price forever, right? 70% off. It's till midnight. The regular price is 6,000. That's what it's gonna go up to again. I believe after midnight. Paul, awesome. I trade part-time and work and want more education. Look, man, the education is amazing, and the next best thing to education is learning while and making money at the same time. Like that is like amazing. You feel it's almost surreal. I'm telling you, man. Um, but in the chat room, it's just great because Matt does have that expertise, right? And I don't care if you give me a video or text or you explain it to me via a trade, but you start picking up on things and you start understanding how things work in the markets in real life, right? Um, from the point of view of somebody who's been in the beast for 40 years. So I think it's great. I mean, if you look, think about it, like you try to get a trading course or in a university with a 40-year Wall Street veteran for what, $1,700 for a year, Monday to Friday, 9 to 5. That's insane. And still making you money. So there's a lot of benefits to the chat room. I mean, I could go on for days. I know you guys have plans and stuff, so I'm gonna just keeping it to the basic points. It is about options, but if you do want to ask about something else, you can do that at any point. If you want to ask Matt, hey man, what's a good stock I can own for 5 years? What's a good stock I can own for 10 years? I want to sell it in 10 years when my kids are old and I want to retire and I want to cash out. Whatever your situation is, right? Maybe I want to buy stock, hold it for 15 years for when my your kid wants to go to college and all that, right? If he does. So that's the thing, right? This chat room is more than just day trading. It's an amazing community. It's a great place to learn about everything that's happening in the markets. So I know like 90 something percent of people, 90+% of people had signed up. Um, I've talked to them at one point, and I'm telling you the progress that I've seen and the members is it's really good and it feels great because I remember when I started this chat room with Matt and it was just me and him and watching it grow little by little, looking at the success that people have had there, obviously, mirroring Matt's trades, but I mean, I don't want to say it's super easy because it's really, but at the same time, like all you're doing is following Matt's trades, So it is easy in the sense that Matt is telling you exactly what to buy, what to sell, and when to do it. So and that's what I mean by easy, right? It's very easy to follow. It's almost impossible that you get lost or that you cannot know how you don't figure this out. Like it's as basic with like buying a call, buying a put. It's as basic as buying a share and selling the damn thing again. So no excuses, right? If you got to go watch a little 5-minute video on what's a call, what's a put, no problem. Go do it. But don't miss out on money just because of that, right? Don't miss out on, you have 7 days to make up your mind and get your money back if you don't like it. So that is really the main emphasis, right? It's going to be a crazy week coming up ahead. A lot of news is going to break this weekend. Who knows what's going to happen? Markets could break, like Matt said. And I have puts, so I don't know what's gonna happen, but I'm protected in case things go south. But in the chat room, you're gonna learn a lot about hedging as well. You're gonna learn about technicals, macro, micro, fundamentals, and you're gonna learn really how Wall Street works inside, right? Like from somebody that's been doing it for that time. Um, so Paul works. I've been learning for 2 years and not being consistently profitable. I love just learning about. Yeah, dude. I mean, I am. I like to learn too. Yeah, it's learning it's a great thing, right? It's like the market always keeps, um, it keeps changing. So you always have to keep evolving, um, your mindset, right? So it's a very interesting thing. Um, okay. CM, it would provide additional monitor. Hey, look, if you have to, get a $30 monitor to make the kind of gains that Matt Maley's doing, I would go right now, Amazon, same day shipping that laptop and like have that tomorrow. Don't let something as simple as not having an extra monitor get in the way of you making this money. And for that matter, don't let anything get in the way. But make sure that you're giving yourself a chance with, and look, it's just a monitor, it's not like, you know what I mean? It's not a holy grail, nothing like that. Like it's just something that's gonna help you be able to look at different things throughout the day. Like I have a 55-inch monitor that I use for my work, and I have like 20 windows open. It's like Minority Report kind of shit. So like I'm telling you that use technology to help you, right? So if you need to get a monitor, CM, get the monitor, but don't let that kind of get in the way of your trading, right? Because there's money to be made. There's money to be made, and the markets are so crazy right now that I mean, crazy is what's going to happen when, who knows, but that's why we're in the chat room, always trying to make sure we can stay ahead of the curve. You can use the lap. I mean, maybe, I don't know. I haven't done it that way. I see him. So, all right. I'm gonna leave a contact information if anybody does want to like reach out or has any questions on like math strategy or whatever it is, regarding this. Let me know. You can call me or email me and we'll chop it up. Let's see. So I'm gonna post that in the chat. Yo, Paul, great seeing you here, man. Lewis, I hope I see you in the chat room. Don't let me down. All right, don't let me down, man. I'm counting on you, Lewis. Join us. All right, and CM, I'm gonna see you in the chat room on Monday. Be there in the morning, 8:30 a.m. Sooner, the earlier the better. Of course, we're all there, hanging out, talking. But Matt typically pops in around 8:30, 9 a.m. Eastern. And we get the cues from him, right? What are we doing, Matt? We shorting, we going long, what are we buying, what are we selling? That's really what it is, As soon as Matt walks in, it's like, all right, what are we doing? But hey, look, here's what I would do, honestly. And I like do this, right? If you join and you're like kind of on the fence, do this. Go to the chat room and ask the members themselves, right? Isn't that the best way for you to know if this is legit or not, right? Ask the people that have been there for over a year or 6 months or 3 months. Just ask in the chat room, and you're gonna find out by yourself. So I really think it's a great thing, right, for every trader to have, some sort of tools. But this is more than that. You have someone who's been doing this for 40 years. That's more than a tool, man. Like that's a pro. That's like a top level, chief market strategist, like internationally known, like top of the food chain kind of thing in the analyst firm side, right? Not some junior associate. You're talking to the top guy. If you go to a private equity firm and you want to talk to the chief, to the chief market strategist, they're gonna think you're crazy and they're gonna call security on you. So you'll probably talk to some junior sales associate who's gonna charge you $5,000 for 30 minutes and say, give me the money. I'm gonna charge you 10% every year, even if we lose or win. So if you like to do that, that's fine. But in the chat room, it's different, right? We're trading there together as a group, as a team. We're all trying to, and keep in mind, Matt is all about education. So every trade comes with education. Matt's going to tell you why he's doing it. He might tell you, hey, I'm a little bearish because of such and such, or CPI numbers came out. I'm a little disappointed. They look bad, whatever, or GDP numbers, such and such. You have someone that is going literally digesting all the data and information in the markets and simplifying this to you in a way that makes sense for you to learn, but more importantly, for you to make money on this. These are tough times right now with the economy. So if you don't get your stuff together, you're just right now sitting on cash, you're losing money every day with inflation. And people think wages went up, inflation is way higher, PPI is higher, so real wages are actually down. So we need to be real about stuff here, guys. You need to find a way to make additional income, especially in this economy. And this is what we're here for. You want to make some extra cash, do it part time, right? You want to do it full time, join us. We're there full time, right? But you can't say that we're not here for you, right? Because we're here, like, well, the chat room is open all day, but the chat room is like trading live Monday to Friday, 9 to 5. And you have the sessions at 11:30 a.m. Eastern for about 30 minutes. And I was able to convince Matt to go longer if he wants to, right? So everybody, all the members, you're welcome. But at the end of the day, it's all about helping you guys, right? And the results, the people, everything, it's beautiful. It's amazing. Being here from when this all started, it was just me and Matt, and seeing it grow, it's just good. And it just feels really good to have helped people make so much money, right? So many people in this chat room have gotten filthy rich, I'm sure, including David, 10xing his money on TQQQ calls today. But hey, we always get somebody in the chat. All the members come here and join, and they post their stuff out of their free will, right? You can go and see in the YouTube chat, like they post this stuff like on their own. They love Matt. They love Matt. I'll tell you that for sure. I would love anybody that makes me that kind of money. So CM, I'll give it a try. What do you have to lose? You literally can't lose anything. You get all your money back, right? So yeah, guys, we're gonna go ahead and we're gonna wrap it up here. I want to thank everybody for showing up and for having fun here with Matt. It was a great session. If you do want to take this a step further, if you do want to get serious about trading, making money with a group, right, with a trusted, verifiable group of retail traders that want to help each other, that want to learn from each other, and that work together, join this community. I'm telling you, I've tried a lot of stuff out there, and there's just a lot of garbage, to be honest. But I can tell you that this is the real deal. I'll vouch for that. So, all right, guys, everybody have a great weekend. Stay safe, right? And if you have any questions, reach out. Thanks a lot for being here, guys. And hope you have a great weekend. Stay safe, folks.